because this is all going to kind of go together, guys. The housing market is stuck until at least 2026, Bank of America warns. Now, again, very infrequently to the show, CNN. CNN has a lot of other things they're talking about right now, not related to real estate, but Brian found this article, and we have Bank of America to thank for this. The mortgage rate of people who already own is historically low, and the rate for new buyers is elevated. Bank of America doesn't think that gap will shrink much for years.
Yeah.
So, guys, this economist is warning that we're stuck, and he's not convinced it will become unstuck until 2026. What's your hot take right out the bat?
I honestly,
Right
I was in line with what they were saying here because of everything that they mentioned as far as, the inventory, the lock-in effect, and then just in general, people wanting to sell. But then again, if I sell, I'm coming at a higher price for my monthly mortgage payment. That doesn't really seem fit for me, so I'd rather just stay fit. Now, one of the things that I have been talking about, and it highlights it here, is that first-time homebuyers are the ones that get, unfortunately, screwed over the most because they're not coming in with equity from their past sale of their house. They literally have their savings, and if that's not enough, then hey, they're capped out or beat out by somebody that has that equity or is transferring over that that proceeds from the sale, or they just have more income to be able to battle it out on the bidding wars. But I honestly think in sense of all this, I think it's right in line with what I feel like slowly things are going to start coming to an ease.
Yeah.
What do you think?
No,
2026?
absolutely. Yeah, 2026. Based on everything that's going, of course, we're not going to build that fast. Our problem is supply again.
Yeah.
We're not going to build that fast. So I don't think by 2026 we're going to build that quick anyways.
And I mean, it says right there, supply of homes simply cannot keep up with demand. Prices have had nowhere to go but up.
Yeah, and I agree with that sentiment, but there's also a stopping point there too, because how many times have we routinely talked on here about affordability?
Yeah.
So if there are less and less people able to afford, then at some point the amount of people who still can afford and the amount of demand we have with inventory, they have to match up.
Yeah.
Because it's not like we have affordability surplus.
No.
That's not happening. So there's got to be, or I'm saying there's probably some sort of sweet spot in here somewhere where the amount of people that can afford will be matched with the amount of inventory that's available to them.
Yeah.
I don't know where that is yet, but we must be careening closer to that.
Yeah.
And it's actually only going to get closer when rates go down, because then that means affordability can come back up. And
again, you guys remember September? We started to hear crickets. It was tough last year, September. October was like, what the heck happened?
Yeah.
November was also pretty, and the December, all of a sudden, boom, we started picking up towards the end of November and then December, right? But they only held the rates that high for like that month.
Yeah.
Right now, we've been longer. So we've been seeing now, because the rates are higher, if we notice on our supply of homes, we actually have more homes available right now.
yes.
And so I think that's also could be a good strategy for our government to do, the Fed government, to hold on to that, just because let's get more inventory. But as soon as rates go down 1 full percent, we're going to start seeing these homes start kind of flying off the shelves again.
It's going to be enough for people to say, hey, that 1% is good enough for me. I can afford that payment now.
Yeah, because that 1% could be anywhere from $300 to $600.
Well, it's the same problem that exists for, let's say, people who can meet the affordability test and are first-time home buyers. It's a similar challenge for those who already own a home. It's like, I'm going to sell this place, but there's not a lot of inventory for me to go choose from to move to the one I want to move to, unless you're moving, literally moving from another state.
Because, a lot of times before, when you used to sell your home, you would sell your home and you can move up to a bigger home.
Yeah.
Right.
So it was considered step up in basis, but right now it's like you can't even consider that. Like you think you're doing a step up a basis, but you're not. You're just transferring exactly, and you're transferring to a higher payment.
Yeah, the move up buyer market is tough unless you're making like a big stretch, or you have a lot of equity over here that's going into the new thing. It is not as easy as a stretch for people now than it was just a couple years ago.
Yeah,
I think we nailed it on the nail on the head when we said situational transactions was going to be what's literally uptaking the market, because I see a lot of people that have to move because they can't pay for it anymore. They're moving out of state. Their life requires it. The rent doesn't make sense, and they rather pay a higher payment in the mortgage because rent is equally the same. And a lot of people are divorcing. People splitting up. They need to repair. So a lot of this stuff is happening situationally, but it's not like before where it's like, I want a new house. It feels like I get it. Let's go out and shop.
Yeah.
It's not. You don't have that leisure to go out and shop for a house no more. It's more like, hey, well, this is my situation right now. Yeah, I could buy it, or hey, I have to stay put.
Exactly.
Until,
well, we have a client that we talked about, actually somebody that's in the same industry. He's a realtor here. and he decided to put his house on the market.
Oh, yeah.
He's gonna make like 200 and change, and now he's moving, I believe, South Carolina or North Carolina.
South Carolina.
And buying a 3,400 square feet. We're here. You know, it's in Santee. It's like a 12, 1,300 square feet. Now he's buying a 5-bedroom, 5-bath home, which is much larger. Put that nice chunk of down payment and really finance
300, 250.
if that. Yeah. So his payment is going to be lower. We have another client that's PCS, and she's selling her condo here in Eastlake, for 600 and change. Going to Tennessee, buying for 330, and it's a 2,900 square foot home.
Dang, what?
Yeah.
So those are the things that we are seeing, and then again, And
it was crazy because on last week's episode we talked about the incomes that are needed to buy a house in each state, and you'd be surprised how all of them are nearly close to 100,000. But it makes sense if I'm gonna be if I'm gonna be making the same income, I'd rather go somewhere where my payment's gonna be lower, so I could keep as much of my money and be able to still freely live my life instead of just literally having handcuffs to paying my freaking house and just working to live here in California. Yeah, the weather's great, but I have no opportunity.
Here's a comparison: $3,300 on a condo here, 3-bedroom, 2-bath, right? HOA and everything. It's like $3,400. She's gonna go buy a 2,900 square foot home. It's actually a 5-bedroom, 3.5 bath. And it's $2,300, property taxes, insurance, and everything.
All in?
All in.
Dude. Wow.
That's, it just logically makes sense.
Yeah.
Yeah,
to some people, right?
Yeah. And then the people that obviously that they want to stay here in California, well, what California brings, and how things are. Like, it sucks, but
sunshine, less rain.
Yeah. So
5 jobs.
So I think in general, the consensus I'm hearing is, okay, so maybe they're right that the housing market is stuck, but what we're talking about in real life examples is people like migrating. They're just going somewhere else. Like, hey, I'm going to take this situation I can do, and it's just going to be somewhere else. It isn't necessarily solving inventory problems here, because that's one place coming back on the market. That's fine. Someone will step in and buy that place, and it's one house off the market in Tennessee. That's fine. That's a one-off right there in that situation. But I think probably what the growing sense I'm starting to hear from you guys and kind of watch and read is that everyone feels like that it's coming to a point. It's coming to a head where, all right, something's going to have to shift because rates have remained elevated. Home prices still continue to go up. I think quarter one we were talking about home prices year over year are up 6.3% or something like that. That's like
crazy.
Okay, so they're up. They're up. They're up.
Get off the fence.
Yeah, and so if rates are not going to go down until maybe only one time this year from the Fed, and then maybe in 2025 a couple of times.
Who knows?
I think we're stuck. But that doesn't mean that people aren't doing transactions, because people are still moving. They're PCSing. They're buying investment places. They're doing ADUs. So, it's weird to say that it's kind of stuck, but also know how crazy busy it is around here.
Yeah.
It's this weird dichotomy.
Like a paradox.
Yeah, it's a paradox. Yeah, because you're like, oh, yeah, the market is quote-unquote stuck. You're like, why are we so goddamn busy? Like, every freaking day. It's nuts. It's not like at the edge of chaos, but I kind of feel like that sometimes.
Yeah.
Is that wrong?
No. It's what it is.
It's like you feel like you're sprinting but going nowhere.
Yeah. Sometimes, there you go.
Hey, we got
You're spinning a treadmill.
A treadmill.
Mortgage. I'm gonna get it.
No, I'm not gonna get it.
Mortgage treadmill. Mortgage treadmill. So you were talking a minute ago about how pending home sales fell in May to a record low. So yes, since this began being tracked by the National Association of Realtors back in 2001. That's what it is. So pending home sales fell in May to a record low, according to data released on Thursday. Pending sales tracked by National Association of Realtors since 2001 are forward-looking gauge on home sales that measure contract signings. Yeah. So that is, I'd say, maybe one of the most stark warnings of, hey, there's maybe a problem and a slowdown for sure as far as volume of homes changing, not prices, but that pending home sales are the lowest that they've been since they started in 2001.
Let's think about this. March is when rates started going up. So we've been through it March, April, May, June.
Yep.
And there's no letdown, It's like this is the longest I've seen that we're staying in that, mid 6s, low 7s interest rate for a while.
Yeah.
And last week PCE core readings and inflation data came in, right at what they expected.
Yeah, right,
and we haven't really seen much, so we'll see how that goes into the following weeks as well as we digest.
And again, that's thank goodness.
Yeah.
Thank goodness that happened.
No, of course, any negative or positive negative information that it's going up, it would have been detrimental to the rates.
Big time.
Yeah. Well, one of the things I think here that I don't know if we said it. So easily before, but starter homes have doubled in value. And that just not people can't keep up with that
No.
unless your income is kept up with that. Then the price of entry to get into real estate is higher, and by a substantial amount. And I'm starting to see more people on social media talking about this too. I saw the well, I don't know if it's viral or not, but I saw it like 3 different times in the same day where this guy is it's a basically green screen to him and his Walmart order online. He's talking about 4 years ago my Walmart order was like $114 or something, and now it's like $420 or whatever. And
I've seen that with the Costco guy.
Maybe it was 146, but I don't know. It was like in the $100 range, and then it was like $400 range. He's like, I literally had a cart saved, and I just I just repurchased all the same things, and like the price was like 3 times as much for all the same items.
That's pretty crazy.
And it's regular grocery stuff like cereal and milk and eggs and some Cheetos and whatever.
Yeah, we bought toilet paper. It was like $25. I'm like, dang, that's some good stuff.
Hey, two.
Yeah.
Super white.
You're buying that rich person toilet paper, man.
No,
the plebeian toilet paper is $18.
Hey, everybody gets a wet rag.
Yeah. Oh God.
Oh, geez.
That's
Right,
gross.
Yeah.
So don't give up the dream is, I think, the takeaway from the article. Even though they said it's going to be stuck, they're also trying to argue don't give up the dream. And here's what I wanted to say on this part is, the reason why is because someone's going to buy that house. Someone's going to buy the inventory. If you're trying to get into a home, it might as well be you. Might as well be you, and me. Go get more homes.
You.
Because again, if we're thinking long view on this and we're looking at these things existing longer than us and being part of our legacy plan, then someone's going to buy that house.
Exactly.
Might as well be us.
I agree.